All right, hi everyone. Welcome to today's webinar brought to you by Vantage. Right, today we're going to be looking at breaking news and setups. Right, trust you've all had a great weekend, catching up with family and friends, all recharged for a brand new trading week. All right, I think we're good to go. All right, before we begin, please take note of the disclaimer. The information, context, and opinions which expressed in this presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes as they do not constitute investment advice and or consultation on how a client should trade. Also, take note of the risk warning that comes with trading margin forex and CFDs as they carry significant risk and is not suitable for all investors. My name is Ketan Ramachandra, and this webinar series is brought to you in a special partnership between Vantage and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, so here's the agenda for today, right? We've quite a few things lined up this week, right? We've got two central bank announcements, specifically coming from the RBA and the RBNZ, and we also have the minutes for the FOMC meeting that had taken place last month, released on Wednesday. Now, kicking things off, right, is the RBA on Tuesday, 8th of July, which is tomorrow, where they're widely expected to reduce the cash rate by 25 basis points to bring it down to 3.6%. Now, this follows a pause that was done at the previous meeting, which was back in April. So in April, they've paused, and now in July, they're expected to make a 25 basis point reduction. So for 2025, the RBA has alternated between making a reduction and pausing since the beginning of this year. Right, so that's Tuesday, 8 a.m., Tuesday, 8th of July at 4:30 a.m. GMT. Now, an hour later, RBA Governor Michelle Bullock will be commencing a press conference as well. So do watch out for that because her remarks and responses to audience questions could have an impact on the Aussie as well. And then on Wednesday, 9th of July at 2 a.m. GMT, the RBNZ is going to release its monetary policy statement where they're expected to maintain the cash rate on hold at 3.25%. Now, throughout 2025 and since the end of last year, the RBNZ has made consecutive rate cuts, but it looks like for the first time in a few months, right, they are looking to hold rate steady at 3.25%. Now, this drops at 2 a.m. GMT on Wednesday, 9th of July. Later on that same day, we've got the minutes from the FOMC meeting that took place in June to be released at 6 p.m. GMT. This will give us further insights into the deliberations that took place among Fed Chair Jerome Powell and his fellow FOMC members, and that could have an impact on the overall demand for the US dollar as well. All right, alongside, besides the two central bank announcements and the FOMC meeting minutes, we also have other key data such as consumer and producer price indices from China on Wednesday, 9th of July. We also have GDP data for the UK that's out on Friday, as well as Canada's employment report as well. So, right, in addition to those two central bank meetings and FOMC meeting minutes, we've got a bunch of other key macroeconomic data coming out as well. Now, with that, let's begin the analysis on the dollar index, right, and then after that, we'll move on over to the Aussie as well to see how we can potentially try and take advantage of the rate cut that's coming up tomorrow. Right, so first of all, let's start off with the dollar index, right? We can see that investors and traders alike have lost faith with the US dollar, right? And we've seen intense selling for the US dollar causing the dollar index to lose over 12.5%, right? When we look at it, since its peak in mid-January, all the way to the lowest point of this year, which was 1st of July last week, we can see that the dollar index has shed more than 12.5%, right? A huge drop over the last 6 months. However, we can see this index now stabilizing in the second half of last week, right? Finding a floor at around 96.60 and looks to be climbing higher this week. Now, despite the dollar index being in a prolonged downtrend since middle of January, where we can clearly see a series of lower highs, lower lows, and as well as the index continuing to trade underneath the red Ichimoku cloud, all highlighting the ongoing bearish momentum. Right, despite all of these factors, nevertheless, counter trend rallies should be expected. Right, as we all know, price never falls down or rises up in a straight line. There are always counter trend rallies that take place, and it looks like we could be in the middle of one that's currently emerging right now. Now, if we look at the most recent counter trend rally, that was back in mid-June, we had a slightly much more longer counter trend rally that took place between 22nd of April and 14th of May. And we also had other rallies, counter trend rallies in early April, as well as in mid-March. So right, despite price overall moving lower over a sustained period of time, right? Uh, Nevertheless, counter trend rally should be watched out for, and it looks like we are in the midst of one that's currently being formed. Now, how strong this counter trend rally is going to be is anyone's guess. Right? If you look at the prior counter trend rallies, with the most recent one that was in middle of June, this was a counter trend rally where the dollar index rose as much as 1.86%. Then back in and April to mid-May, we saw the dollar index rebound 4.14%, and in April it rebounded 2.15%, and in March it rebounded 1.4%. So you can see here the degree of the rebounds can vary quite drastically. So it's anyone's guess as to how high this rally could last, but we can try to identify significant resistance levels, right? Potential areas where the dollar index could finally run into headwinds once again. So with that, let's try to identify the key resistance areas for the dollar index. And when I look across this level at around 98, right, I see what is I would label as a pullback resistance. Now this level at 97.92 previously formed a very significant swing low back in on 21st of April. And then again, as the dollar index fell towards this level once more in June, it managed to stabilize above this level, around this level on 13th of June before staging a decent counter trend rally. So you can see here, this level at 97.92 previously functioned as a pretty strong multi-swing low support. However, with the dollar index falling underneath this level last week or 2 weeks ago, right, this prior support level is now likely to function as resistance. So that's how we've identified the first major resistance for the dollar index on the daily time frame, and it is a pullback resistance at 97.92. Now higher up, right, we can see that since 4th of June or since the beginning of June, right, the dollar index has failed to break above 99.40. Right, you can see here this has been a pretty strong overhead barrier, and this is where we would label the second resistance. Right, now that we've identified the resistance levels, I would also want to highlight this downward channel for the dollar index that has been in place since 12th of May. And when we look at it here, this is a channel that has been respected since over the last 6 to 7 weeks. Now we can see here there's the false breakout that emerged that took place on Monday, 23rd of June. But as the dollar index returned into the downward channel, we saw the trajectory gain further traction to the downside. And we can also see that the dollar index has bounced off the lower trend line 3 times. So you can see the first bounce taking place on 26th of May, the second taking place in mid-June, and of course the most recent one taking place last Tuesday, 1st of July. Right, so this is a downward channel that continues to remain respected, and the intersection of the pullback resistance at 97.92 and the upward trend line of the downward channel can help us identify a pretty strong potential resistance area here. So this could be an area where the dollar index could run into some serious headwinds. So if we see any counter trend rally rising up towards 98, right, this is where I think the dollar index could once again stall and perhaps reverse to continue the downtrend. So do take note, right, should the dollar index approach this level or this area this week, this is where I think it is likely to stall and perhaps make a reversal over the next over a period of 1 to 2 days before resuming the downtrend. Right, now that we've established the downward channel and the first and second resistances, we can also now run a Fibonacci retracement beginning from the swing high on 12th of May, going down to the swing low on the 1st of July. Looking at all the fibs, right, we can see the 23.6% retracement aligns quite close to the first resistance, while the 50% retracement also aligns close to the second. So we're going to use these two retracement levels in our analysis, right? The presence of the retracements add further significance to the strength of these potential resistance areas. Right, so not only are these pullback resistances, they are also accompanied by Fibonacci retracements. So once again, we have three factors: identifying a potential barrier for the dollar index, First is the pullback level at 97.92. Second is the upper trend line of the downward channel. And third is the 23.6% Fibonacci retracement. Right, now that we've identified the key resistances, what about support? So for that, we're going to have to uh, zoom out and go to where the dollar index was trading back in March of 2023. Right, if you look at where, hang on, where was it? Oops, here. Go. Now, the dollar index is currently trading around 97.30. Right, as we trace a little bit higher. And then when I look across uh, this level here, right, I can spot a pretty decent overlap. Right, this level at 96.43 previously was a little bit functioned as a little bit of a headwind on mid-February 2022, and then functioned as support on right at the end of Feb of 2022. This creates a pretty decent overlap, which we can probably use as the first support and slightly below. Right, I can also spot another swing low that had taken place here in January of 2022. Right, so this is where we can identify the second potential support. Now coming back to where the dollar index is trading, we can see the first support, which was an overlap at 96.43, is pretty much where the dollar index managed to stabilize on Tuesday, 1st of July. So that overlap was pretty significant as we saw the dollar index find its footing around here and stayed a pretty decent rebound since the second half of last week. Now, for anyone who's long on the dollar index since last week, or perhaps since the beginning, since markets reopened this morning, right? Identifying your take profit target in this area that's identified by the downward channel, right? The upper trend line of the downward channel, the pullback resistance, and 23.6% Fibonacci retracement, right? This is a pretty good area to identify a potential price target for any long traders, for any traders who are long on the dollar index as of today, or perhaps as of end of last week. Now, these are the key support and resistance levels for the dollar index, right? We're seeing what looks to be the beginning of a pretty decent counter trend rally, and where that counter trend rally for the dollar index could get exhausted is at around the level of 98. Now, with that, let's move on over to Aussie. Right, as we've got the RBA coming up tomorrow, and with demand for the dollar picking up since end of last week, naturally that's going to create headwinds for currency pairs like the Aussie, the Kiwi, and the Euro and Pound as well, cable as well. Right, now focusing on the Aussie for now, right, as we've got uh, a rate cut coming up, right? That could create even further headwinds or for this, yeah, that could even create further headwinds for this currency pair, and we could potentially see the Aussie fall even lower tomorrow, Tuesday, 8th of July. Now we can see here the Aussie running the resistance around 65.90 last week, right? It looks to be forming a pretty significant swing high resistance, perhaps something like this over here that was formed in middle of June. So this is how we're going to identify the first major resistance for the Aussie. It's a swing high resistance that's currently being formed, and that level sits at 65.83. Now, second resistance is this swing high that had taken place here on 7th of November 2024, quite clearly, right? Pretty strong resistance here. And this level sits at 66.80. Now slightly below, right? Looking at the dollar, the Aussie is being sold off quite aggressively today, right? It's falling quite sharply, testing the threshold of 65 cents. It's quite likely we could see this level give way. Where it could finally stabilize would be at this area here, where I see is a nice swing low being formed here on 23rd of June. And prior to that, we can also see the Aussie stabilizing at around 64 cents since 16th of May. So this area here, right, looks to be one of the first levels where the Aussie could finally stabilize, and that's where we're going to label the first support. So first support for the Aussie is at 64 cents pretty much. It's a multi-swing low level that has been in place since middle of May, since mid-May. Now, in terms of the second support, right, I see a nice pullback level at 63.30. This level previously functioned as resistance at the end of March and early April, but after breaking higher, right, a prior resistance can potentially function as support. So that's how we've identified the second support is a pullback level at 63.30. Now, on this uptrend here that begins from this swing low on 9th of April, we can run a Fibonacci retracement ending with the swing high on Tuesday, 1st of July. Now, looking at all the fibs, we can see that the 23.6% retracement sits pretty close to the first support, while the 38 retracement aligns very well with the second. So we're going to keep these two retracement levels on, and the first support is more of an area, right? The first support zone is more of an area beginning from 64.30 going down to 64 cents. So this is where I think the Aussie could potentially stabilize uh, over the next 24 hours or so. So with the rate cut taking place, right, with the RBA expected to make a 25 basis point reduction, we could see the Aussie sell off even more tomorrow morning. However, as a first potential take profit target, right, I would identify within this zone, which is around beginning from 64.30 to 64 cents, right? So anyone who's short on the Aussie, right, as of today and trying to take advantage of the rate cut that's going to take place tomorrow, right, I would identify a suitable take profit target for this currency pair in this first support zone that begins from 64.30 to 64.03. Now, of course, if you continue to see this currency pair slide lower, the second take profit target could be identified at 63.30. Right, so these are the key levels here for the Aussie. And of course, if the Aussie is going to be falling sharply, if the Aussie continues to fall sharply over the next 24 hours, it's very likely going to drag down the Kiwi as well. So let's take a look at where the key levels are for this currency pair as well. Now, in terms of resistance, it's quite clear, right? There's a nice swing high that was formed last Wednesday at 16.98, just underneath 61 cents. So this is very clearly where the first resistance sits. And higher up, the second resistance. Actually, if you look at it, the first resistance swing high here is actually sitting pretty close to what I would see is a pretty good overlap level. Right? Yeah, it's actually pretty good overlap level that begins from 9th of September 2024. We can see a significant swing low being formed here on 12th of September last year. And we see a significant swing high being formed last Wednesday as well. So this creates a very nice overlap at 61.24, which we can label as the first resistance. Now higher up, the second resistance is another overlap, and that level sits at 62.57. Right, you can see swing high resistance being formed here on 29th of August 2024, then support being formed on at the end of September of last year. This creates another nice overlap at 62.57, which we can label as the second resistance. Now, in terms of support, right, when we look at the Kiwi, right, we can see a very similar market structure to the Aussie, and we see a significant swing low being formed here on 20th of June. Right, and when I look across this level, we have a pretty decent overlap that begins from 13th of May, right? And this overlap level sits at 59.39. So we can label this as the first support and slightly below, right? We have another swing high resistance being formed here on mid-March. So this is where we can label the second support, right? This is a pullback level at 58.19, which we can label as the second support. Now with the support levels identified, we can now begin to run a Fibonacci retracement beginning from this swing low on 9th of April, going up to swing high resistance on 1st of July. Taking a look at all the fibs, once again, we can see the 23.6% retracement sit pretty close to the first support, while 50% lies just underneath the second. So once again, we'll use the 23 and 50 retracements. Right, so once again, right, with demand for the US dollar picking up, that's created strong headwinds for the Aussie and Kiwi alike. And with a potential rate cut coming up for the Aussie tomorrow, right, we're likely to see that currency pair drop initially as well, and that's likely to pull back. That's likely to cause or that's likely to drag down the Kiwi along with it as well. So anyone who's short on the Kiwi, right, and if there's further follow through tomorrow, right, identifying your take profit target for the short trade within the first support zone that begins from 59.70 to 59.40 is a suitable area to do so, right? So that's the first take profit target. And of course, should we see the Kiwi drop even further, right, the next take profit target can be identified at the bottom of this wick here, which sits at 58.82. Right, so take note, right? The rate cut is likely to create for the headwind. The rate cut by the RBA is likely to create for the headwinds for the Aussie, and that in turn is going to likely drag down the Kiwi as well, right? So anyone who's short on the Aussie and Kiwi, and identifying a take profit target within the first support zone is a suitable area to do so. All right, with that, now let's take a look at dollar yen. Right, of course, with demand for the dollar picking up, that has caused dollar yen to reverse last at the end of last week as well. It managed to stabilize at around 143.35 and has climbed as high as 145.20 so far today. Right, so we can spot a very nice support area here. Right, when I look across at 142.41, this is a multi-swing low level that has been in place since 6th of May. And you can see the first swing low, significant swing low taking place on 6th of May, the second on to the 6th of May, the third on 10th of June. You can even argue here there's a significant swing low that had taken place on Friday, 13th of June, and the most recent one was on 1st of July. Right, so very clearly, 142.41 is a very significant support area, which we can label as the first support multi-swing low level at 142.41. Now slightly below, there's another significant swing low that was formed here on 22nd of April this year. And when we zoom out and look at the dollar index, as look at the dollar yen, in September last year, we can see another very significant swing low being formed here as well. Right, we can see back in September of last year, dollar yen dropping as low as 139.60, and this is the area where it pretty much found support once again. So very clearly, there's very strong uh, buying pressure here at around 140.40, and this level can be identified as a multi-swing low support, which we will label as the second support. Right, very significant multi-swing low level, labeling it as the second support, and this support zone begins from 140.67 all the way down to 139.50. Now, in terms of resistance, right, the first major resistance is coming in at this multi-swing high level at 148.52. And we can see a very significant swing high resistance being formed here in mid-May, and even we can even argue that there was a similar swing high resistance being formed at the end of June as well. So very clearly, first major barrier for the dollar yen is coming in at 148.45. It's a multi-swing high level, but slightly below that, right? I would like to label intermediate resistance level as well, because when I look across this area here at 146.28, right? Look at the top of this wick on 29th of May and look at the close or look at the open of this candle on 23rd of June, right? This highlights a pretty decent intermediate resistance barrier as well, something to keep an eye on here. So if we do see the dollar yen clear this intermediate resistance barrier at 146.30, right? Right, then we can probably expect a strong run, probably as close as 148, right? A close run up, a close rally, climbing as close as 148, or perhaps all the way up to 148.45. So take note, right? Although we are seeing a strong rebound in the dollar yen, right? It is approaching an intermediate resistance barrier at around 146.30. So this area here can also be used in the identification of a potential price target, right? Your first take profit target can be identified within this intermediate resistance zone, and the second take profit target can be identified between 147.90 and 148.45. Okay, right. Now, on this prolonged downtrend that has begun from 10th of Jan, we can run a Fibonacci retracement from the swing high, 10th of Jan, going down to the swing low on the 22nd of April. Looking at all the fibs, we can see that, okay, dollar yen has already climbed above the retracements from 23.6% to 38.2%. And 50% is sitting a little bit too far from where this multi-swing high resistance sits. So that's fine, right? Don't force the Fibonacci levels onto the analysis unless it sits close enough to the predefined resistances or supports. Now, on this uptrend that begins from this swing low on 22nd of April, we can run a Fibonacci retracement to the swing high on the 12th of May. And of course, we can see that the dollar yen has already dropped underneath all the retracements from 23.6% to 61.8%. However, 17.6% sits just slightly below the first support, so we're going to keep that retracement on. All right, so these are the key levels here for the dollar yen, right? With demand for the US dollar picking up since the end of last week. This currency pair has also after stabilizing around 143.40, has rallied quite strongly. And it looks that upward momentum looks to be gaining further traction today. So to identify the first suitable take profit target, that could be within this intermediate resistance barrier at 146.30. And of course, should we see this currency pair continue to climb even higher for the remainder of the week, we can then try to identify or target the second exit, which would be between 147.90 and 148.45. All right, now with that, let's move on over to the commodities, beginning with gold, right? XAU USD is an instrument that tracks spot gold futures. And we can see that gold prices have pulled back in the second half of last week as well, right? So a combination of a stronger dollar and de-escalation in geopolitical tensions has caused demand for safe haven assets such as gold to taper off as well. So take note, right? We've seen the dollar demand for the US dollar pick up since the middle of last week. We've also seen a certain level of de-escalation in geopolitical tensions in the Middle East, all of which has also caused demand for safe haven assets such as gold to taper off as well. So hence we are seeing a little bit of headwind for gold prices. So gold looks to be falling, retreating once again, and it's falling towards what I would say is a pretty significant support level at $3,237 per ounce. When I look across this level here, this looks to be a pretty significant overlap. Why is that the case? Firstly, it formed a significant swing low in the first week of April. Then after that, it functioned as resistance here in middle of May, and it served as support on 29th of May and support once more right at the end of June as well. So this creates a pretty decent overlap level at $3,237, which we can label as the first support. Slightly below, right, we can see previously a significant swing high resistance being formed in early April, and then we see a swing low taking place in middle of May. This creates a very nice overlap. We can see the swing low that was formed on 15th of May literally touched the prior swing high to form the overlap and bounce off this level very cleanly. So that's how we've identified the second support for spot gold. It's an overlap level at $3,132 per ounce. Now, in terms of, okay, before we get to resistance, I would like to run a couple of Fibonacci retracements as well. First retracement is going to begin from this swing low on 7th of April, going up to swing high on the 22nd of April. Looking at all the fibs, right, we can see that the 61.8% retracement, along with the second support, helps us identify a pretty significant support zone, right, beginning from $3,165 to about $3,132. Now, the second retracement is going to be run from this swing low on 15th of May, going up to this swing high on 16th of June. On this retracement, we can see the 61.8% 61.8% level aligned very well with the overlap at 3,237. Now, in terms of first major resistance, right, we can see a swing high being formed here as well, right, on last Thursday, and we can see a little bit of support here on at the end of June. So this creates somewhat a pretty decent overlap, which we can label as the first resistance here. And higher up, we can see that gold has failed to break above $3,430 per ounce since 6th of May, right? You can see this level here has held steady, right? Despite a slight breach on Monday, 16th of June. Generally, this multi-swing high at 3,430 has held up pretty well, and that's where we will label the second resistance. Now, on this downtrend, of course, that begins from 16th of June, we can also run a Fibonacci retracement from the swing high, 16th of June, going down to the swing low on the 30th of June. And we can see that the 61.8% retracement aligns pretty close to the first resistance. There's a pretty strong headwind over here as well. And not only that, I would probably say we may have a pretty decent downward channel that's probably being formed as well, right? We can see a couple of bounces here, or at least 3 bounces here off the lower trend line of the downward channel, and one resistance here being formed last week. So somewhat pretty decent downward channel to take note of for gold prices as well. So anyone who's short on gold since this morning, perhaps, or maybe since last Thursday, right? Identifying a take profit target close to $3,276 per ounce would be a suitable area to do so, right? So anyone who's short on spot gold, right, and with gold prices looking to fall even further today, right, identifying your take profit target within this zone that begins from $3,280 to about $3,250 is a suitable area to do so. All right, with that, now let's move on over to crude oil, WTI oil, and we can see that after surging as high as $76 per barrel, crude oil prices fell sharply, right, practically nosediving, reversing nearly almost all the gains that were seen since middle of June. Prices stabilized uh, at the end of June and early July before spiking a little bit higher in this towards the end of last week. Now, after gapping lower today, right, take note there's a relatively big gap for WTI oil after closing at $65.64 last Friday. This commodity opened at $64.79, and it looks to have filled that gap. Now it's important to take note that the gap has been filled because probably that could result in a continuation of the downward momentum, right? Despite uh, geopolitical tensions, right? Escalated geopolitical tensions in the Middle East causing oil prices to spike. The subsequent ceasefire has caused a lot of the risk premium to be removed from oil markets, and that has what has caused this very sharp reversal in price as well. So with this gap being filled, right, there's a pretty large gap that was formed earlier this morning, and now it looks to have been completely filled. We could now see a potential resumption of the downtrend for WTI oil. So with that, let's try and identify the first supports first, key supports. When I look across this level here at $63.70 pretty much, I see a pretty significant overlap, right? Basically, first, we see a significant swing high resistance being formed on 22nd of April. Then we can see like a nice double top here being formed between 14th of May and 21st of May. And after breaking higher, in the first week of June, we can see WTI oil bounce off this level in mid-June and bounce off this level once again at the end of June. So this creates a pretty significant overlap at $63.69 per barrel, which we can label as the first support. Now slightly below, right, I can see another support level here as well at around $60 per barrel, right? We can see WTI oil stabilizing above this level pretty much since mid-May. This is where we can label the second support. Now on this uptrend, that begins from this swing low on 5th of May. We'll run a Fibonacci retracement to the swing high on 23rd of June. Looking at all the fibs, right, we can see the 61 and 78.6% retracement levels accompany the first and second supports quite well. So we'll keep these two levels on and highlight the support areas as zones as well. Now, with WTI oil filling the gap and looks to be retreating, right? Anyone who's trying to uh, capitalize on the downward trend that we've seen or trying to capitalize on the bearish reversal since Thursday 3rd of July, right? You can identify a suitable take profit target, right? Close to $63.70, right? This is a pretty significant overlap that's accompanied by Fibonacci retracement at 61.8%. So anyone who's probably been short on WTI all since last Thursday or Friday, right? Now that this gap has been filled, right? A suitable take profit target for the short trade can be identified around $63.70. Now higher up, let's try to identify some key resistances. Right, when I look across this level at around $68.36, I see a pretty decent barrier here, right? We can see pretty decent swing low being formed on 23rd of December last year. Another support here on 26th of Feb of this year. Little bit of resistance here in mid-March. Support once again on 28th of March, creating a pretty decent overlap, right, at $68.36, which we can label as the first resistance. Now higher up, the next potential resistance barrier could possibly come in around $71 per barrel. Right, why is that the case? We see, right, a significant swing high resistance being formed here on 1st of April. And we see a little bit of support being formed here on 18th of June. Right, so it creates a pretty decent overlap, not the cleanest level, right? This is definitely not the cleanest level, but nevertheless a pretty decent overlap at $71, which we can label as the second resistance. All right, so these are the key levels here for WTI oil, right? So after filling this gap, we could potentially see a resumption on a downtrend. Let's take a look at it on a 4-hour time frame. Right, the gap is pretty clear here. Gap has clearly been filled. Right, gap has clearly been filled, and we could see a potential resumption of the downward trend. And also, I would take note of this intermediate resistance barrier. I would like to highlight this intermediate resistance barrier at $66.78. And this is something where WTI oil has failed to climb above since last Wednesday. All right, with that, now let's move on over to the indices. Let's begin with the DAX, looking at Germany 40, right? Germany 40 is the instrument that tracks the DAX futures. And we can see that after stabilizing around 23,000 in the 3rd week of June, this index has managed to climb higher as well, right? Nevertheless, it's not as been as smooth sailing as compared to the US indices. For example, if we look at US 500, but nevertheless, it has sort of stabilized at around 23, just under 24,000 for now. And also between or beginning from 19th of June, I would say it looks like a nice upward channel is likely being formed for the DAX. You can see a nice upward channel being formed with the DAX bouncing off the lower trend line on 23rd of June, 2nd of July, 4th of July, and earlier this morning as well. Right, so pretty decent upward channel that's currently in progress. And with that, we can try to identify the resistances, right? The first major resistance clearly is this swing high level at 24,303, right? The intraday all-time high for the DAX was formed on Thursday, 5th of June, and this is where the first major resistance has been labeled. Now for the second resistance, right, we could try to rely on Fibonacci tools such as extensions and projections. So let's try an extension first. To find key extension levels, we're going to run a retracement from this swing high on 5th of June going down to the swing low on the 19th. Key extension levels sit at 127 and 161%. So you can see here the extension at 127% sits at 24,865. So this is where we can label the second resistance. Now, in terms of support, right, clearly this is the first significant swing low that was formed, right? And let me see if there's another, and there's also a pretty decent overlap at around 23,432, right? So we got several key areas that we can use in the identification of the first and second supports. Firstly, the overlap level at 23,474 is where I will label the first support, and the swing low here at 23,000 is where I would label the second support. Now, on this uptrend, that begins from the swing low on 7th of April, going up to the intraday all-time high on 5th of June. We can run a Fibonacci retracement, and when looking at all the fibs, we can see 23.6%. Okay, the DAX has already retraced underneath the retracement at 23.6% or fallen below it, right? So definitely we can't use that. And of course, 38.2% is simply sitting too far from where the DAX is currently trading, so that's fine, right? Don't force the Fibonacci levels onto the analysis if it doesn't align close enough to predefined support or resistance areas. Now, it's a smaller uptrend that begins from here, 19th of June, going up to 30th of June. On this uptrend, we can see the 61.8% retracement aligned very well with the first supports. We're going to keep that level on here. And we don't need the extension at 161% for now. Perhaps it's an extension level that we could use for the future, but definitely not for the present moment. All right, so these are the key levels here for the DAX, right? The Germany 40 is an instrument that tracks the DAX futures. We are seeing that this instrument continues to trade within this upward channel, and it looks to have stabilized off the lower trend line once again today. So with this upward momentum looking to remain intact, and we can try to target a potential take profit area beginning from 24,170 to about 24,300. Right, so anyone who's long on the DAX, right, perhaps since the end of June or maybe since the middle of last week, right, identifying a potential take profit target for the long trade between 24,170 and 24,300 would be a suitable area to do so. Right, now let's wrap things up by looking at US 500. Right, the US 500 has made its latest intraday all-time high last week on Thursday, 3rd of July, hitting 6,284.50. Right, and you can see here that this index has already broken above the prior swing all-time high, right? The prior all-time high was formed on 19th of Feb, and we see the strong breakout through this level here. So once a prior resistance gets taken out like this, it is likely to function as support, right? In this case, it could very well be a pretty significant pullback level at 6,128, which we can label as the first support. Now slightly lower, I can also spot another swing high resistance being formed here in mid-June. And once this level gets taken out, this is where we can label or identify a second support area, another pullback level. At 6,034, which we can label as the second support. Now, right, what many of you would have of course noticed that the US 500 is trading close to its intraday all-time high at 6,284. Right, in this scenario, how would we possibly identify the next major resistance area? Right, we can, as I mentioned, we can use Fibonacci extensions and Fibonacci projections to help us identify potential overhead barriers. So let's try with an extension first. To find that extension, we're going to run a retracement from this swing high on 21st, 5th of March, going down to the swing low on 7th of April. Our key extension levels sit at 127 and 161%. Very clearly, 137% extension has already been exceeded, but we can probably use the extension at 161%. Now we can also try to run a projection. Projection involves 3 points, so let's start the first point from 21st of April, swing low on 21st of April, going up to the swing high on 20th of May and ending with the swing low on 23rd of May. By looking at all the key projection levels, which begin from 61.8%, 78.6%, and 100%. Now, the projection at 61.8% can be also used as a resistance barrier, and that's pretty much where US 500 has stalled at the end of last week. Right, so clearly, pretty much at the projection itself, this is where it stalled and looks to be running into a little bit of headwind. So the first resistance has been identified as at the projection at 61.8%, and the second resistance can be identified at the area that's identified by a Fibonacci projection at 78.6% and a Fibonacci extension at 161%. So what we have here is a Fibonacci confluence. Right? So Fibonacci confluence simply means an area where one or more Fibonacci levels exist. In this case, we have an extension at 161% and a projection at 70.6%. Now, the projection at 100% sits at 6,618. Perhaps this is a level that can be used in the future, but for now, we don't need it. So let's just get rid of the other projections and just keep 61 and 70.6%. Now, with US 500 looking to be running into headwinds at around the projection at 61.8%, perhaps you could see a pullback all the way down towards 6,128. And if that were to happen, and if you can see the US 500 stabilize around the first support, that may be an opportunity to go long on this instrument once again, right? So if we do see a pullback materialize over the course of this week, and if we can hold up at the first support, we could potentially see a nice resumption of the uptrend. Now, beginning from 21st of April, right, I would also say that the US 500 has been trading in a pretty decent upward channel. So the combination of the lower trend line of the upward channel and the first support at 6,128 could help us identify a pretty key support area. And if that support area does indeed hold for US 500, it may help us identify a much better buying opportunity to try and capitalize on the uptrend. Now remember, if this upward channel gets broken convincingly, right, we are likely to see an end, a near-term end of the upward momentum, and we could see a much deeper pullback materialize over the course of the week or the next couple of weeks. So do take note, while we are seeing a very strong recovery in US equity markets and with US 500 trading within this upward channel, a clean break through this upward channel could signal a potential reversal in momentum and potentially driving this index all the way down towards the second support at 6,034. Now, on this uptrend that begins from this swing low on 23rd of June, we can run a retracement going up to the intraday all-time high 3rd of July. Looking at all the fibs, right, we can see 38 and 61% retracements, sitting close enough to the first and second support. So let's keep these two levels on here. Now, the second retracement can be run from this swing low, 21st of April, going up to the intraday all-time high. Looking at all the fibs, we can also see the 23.6% retracement sitting pretty close to the second support. Right, so these are the key levels here for US 500 on a daily time frame. Right, so before we wrap things up, just to do a quick recap of what we can expect for this week. Right, not only do we have two central bank announcements coming up on Tuesday and Wednesday, we also have the FOMC meeting minutes as well. So the RBA is widely expected to make a 25 basis point reduction in its cash rate, bringing it down to 3.6% on Tuesday, 8th of July. That takes place at 4:30 a.m. GMT, followed by the press conference by RBA Governor Michelle Bullock at 5:30 a.m. On Wednesday, 9th of July, the RBNZ is expected to maintain rates at 3.25% at 2 a.m. GMT. Right, this follows the first pause in about, I think, 6 or 7 consecutive meetings. Right, prior to this, they had cut at every single board meeting over the last 7 instances. But nevertheless, this is now looking to be a pause. And of course, besides the FOMC meeting minutes, we also have GDP data from the UK on Friday, Canada's labor force report on Friday as well. And we have inflation data as well, consumer inflation and producer price inflation data for China being released on Wednesday, 9th of July, 1:30 a.m. All right, that's all from me for today, folks. Right, I hope this has been a great session. Do look out for these upcoming major news releases, as they are very likely to impact those instruments and currency pairs that are related to those announcements. All right, thanks everyone. Take care. Have a great trading week and catch you all in the next session.